Producing over 500 hours per week of talk radio, GCN Live is a world leader in talk radio. Archives for the following program can be found at GCNlive.com.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. The Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. This is Mark Leibovit. Welcome to Wall Street Raw on this Saturday morning, December 5th. Obviously, you have a lot of choices on a Saturday morning, and we certainly appreciate you tuning into our program here on the Genesis Network. Anyway, we have a lot to talk about in the markets, and I do have my regular special guest, Sinclair No, out there in the green room, and we're going to have him on for at least one segment this Saturday morning, so stay tuned for that. As you know, I do produce the VRTrader.com newsletter, and that's how you would try to get some more information about my services. You also go to WallStreetRawRadio.com. We talk about all kinds of stocks and markets in our various newsletters. I'm very proud of the fact that over the years, Timer Digest named me top market timer, not every year, but certainly in the top list. And this is based on my proprietary volume studies and my cyclical studies. Many of you may remember me from years ago, the old timers, as an elf on the old Louis Rukeyser Wall Street Week television program, which ran for about 25 years. For about 10 of those, I was one of those elves that came on at the beginning of the show that told you whether the market was bullish, bearish, or neutral. At the same time, I was also a guest, you may have seen me on the public broadcasting show Nightly Business Report with my old friend Paul Kangas as a market monitor guest. So I've been doing this a long time. I started as a market maker on the Chicago Board Options Exchange, ended up being director of research of a couple brokerage firms, took a couple companies public, ran a long-short REIT hedge fund for a short period of time. So pretty much have been across the gamut here in terms of Wall Street. And right now I produce VRTrader.com, which again produces a series of newsletters, and I would encourage you to go to the website rather than go to all the details here. I'm happy to report again that eSignal is a sponsor of this program. eSignal is a stock market platform. You may be familiar with the various platforms out there. If you watch national television, many are advertised. eSignal is my favorite. Easy to use. If you want more information on eSignal, go to eSignal.com/radio. That's eSignal.com/radio. If we have time in a later segment, we'll try to go over an example this past week. Of course, you don't see it since this is radio, but trying to describe, the platform and how I use it and how I pick stocks and the overall market. In fact, speaking of the market, I've been very proud over the years, and I document this in my book, The Trader's Book of Volume, how I've never been caught in a market crash. And I'm going all the way back to 1987 when even on national television back then I had warned that third week of October could be disastrous, and indeed it was way back there, even in 87. But in recent years, in fact, just this past summer, warnings from April forward that a big decline was coming, and sure enough, we got a big shakeout. In fact, we got a little bit of a flash crash there on August 24th of this year when in the morning, I believe the Dow was down about 1,100 points there for a few moments, but that sort of mirrored what we saw in May 2010 with that other flash crash, and I had warned several weeks before that as well, excuse me, that we had problems and we saw selling coming in. And that's part of what we do. I'm looking at the volume patterns, and it says something is changing. The smart money out there, I guess that's what we're talking about. Are there more buyers or are there more sellers for the market or individual stocks? And much of this is based on anticipatory moves on the part of the smart investors in terms of what they expect to see, actual news they may have in hand, inside information, or just concerned about what may be coming forward. So in my book, The Trader's Book of Volume, I document that. You may want to pick up a copy of that. It is available at all the major outlets, Amazon in particular. But in my introduction, I talk about how we've never been caught in a market crash. Very important because I'm not in the camp that says hold on to stocks long term and watch them drop 50%. That's not where I come from at all. And I consider myself a survivor, that I've been doing this for 35 years, still here, still in the game. One of the lessons that I learned when I was on the floor many years ago, and these are the fellows that I admired, and this may not fit your investment strategy at all, but their attitude was ring the register as often as possible. In fact, many of the more sophisticated traders would go home flat every night, meaning they would close out all positions, start each day fresh. That way there's no stress overnight. And as you can see what happened even in the markets this past week, where you have a Thursday where the market is down 260 points, and then Friday it's up 350 points, just back and forth like this. And the traders would just deal with the activity as it unfolded and opportunities as they unfolded during each day versus carrying positions. So I'm not at that extreme, but in our letter we try to ring the register as often as possible, and I view this as a way of making a living, not as a get-rich-quick scheme, or even for that matter as a long-term investment strategy. I don't think you can, my personal opinion is you can't invest in a market long-term and just walk away from it. I think there's too much volatility, too much manipulation. I've talked about this on and on in our commentary here on the show and in my newsletters. The markets are rigged. All markets are rigged. We could see even this past week with Mario Draghi and what went on in Europe, and the little disappointment that came in on Thursday when he didn't do enough in terms of stimulus for the European economy, which is still very much in the cellar. And in fact, we have, as you may or may not know, negative interest rates in Europe. In other words, you got to pay the bank to hold your money. That could come here. It could come here. I know even though Janet Yellen's talking about raising rates maybe a quarter point December 16th, is our economy really as strong as the economic numbers are telling us, many of which are questionable in the way they're calculated. So we go on and on here about that whole variable. I also want to remind you that if you are interested in some of Doc Wallach's products, which I use myself, you can go to WallStreetRawHealth.com. That's WallStreetRawHealth.com for more information there. That is also tied to our website. I pride myself that I'm a member of the Fourth Estate. In other words, I try to challenge the economic reports and comments that you hear, a little politically but more economically out there. And it's a disgrace that we have financial media and the regular media in the U.S. that really is just are spokesmen for the White House or for Wall Street, rather than really questioning data and questioning stuff. We know the unemployment numbers are not really accurate. They're fictitious. They're distorted. A lot of people stop looking for work, so they're not counted in the numbers. So we're told things are really improving. Yes, there might be a lot of new part-time jobs up there, but we're nowhere back to where we were in terms of where before the crash in 2007 and 8. That bit of a distortion is a big problem for me in terms of that. But I guess as a follower of the market, you can't stand there and let the train leave the station, and you've got to stay on top of what's happening. So we trade the market, follow the market, and do our best to stay on top of things here, even though we may not believe the numbers that are supposedly causing the event. So a lot of volatility this week. We're going to be talking a little bit about that with Sinclair in our interview, and more hopefully in our last segment today when we go over active stocks as well. Thank you, and stay tuned.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Most of you know that heart disease is the #1 silent killer in the U.S. What if I told you for just $54.95 a month you could fight against heart disease naturally? At Heart and Body Extract, we've been helping thousands of people get back to a healthier heart. Don't just take my word for it. Check out all of the success stories at hbextract.com. Or to order, call 866-295-5305. That's 866-295-5305. hbextract.com. Don't risk it when you can take charge of it.
This is a healthcare alert from the Pain Relief Hotline. If you, a family member, or a loved one suffers from knee, back, shoulder, or ankle pain and have Medicare as your primary insurance, we've got great news. You don't have to suffer any longer. You can immediately qualify for a pain-relieving brace at little or no cost to you by calling our 24/7 Pain Relief Hotline at 866-389-0620. Delivery is free and all paperwork is handled for you. If you are on Medicare and have knee, back, shoulder, or ankle pain, don't wait. You can qualify to immediately receive a pain-relieving brace at little or no cost by calling our 24/7 Pain Hotline now at 866-389-0620. Our representatives are standing by 24/7 to take your call and rush you your pain-relieving brace at little or no cost to you. Shipping is free and all paperwork is handled for you. Just call 866-389-0620. That's 866-389-0620. Again, 866-389-0620.
Are your Google search results killing you? Unflattering content in blogs, news articles, online reviews, social media, or other sources can jeopardize your reputation, your business, and your livelihood. Let Reputation.com help. Our patented technology will make the truth about you more visible while pushing down unwanted negative content. Improve your Google search results. Call Reputation.com at 1-800-831-0771 for a free consultation. That's 800-831-0771.
Owe $10,000 or more to the IRS?
Get on board with the Tax Admiral. Don't take on the IRS alone. I'll cut penalties and reduce your overall tax bill. Sometimes I can even get it zeroed out completely.
We're an A-rated company helping people clean up their mess with the IRS.
If you owe $10,000 or more, then call the Tax Admiral.
Call 800-287-7180. Again, that's 800-287-7180. 800-287-7180.
My name is Bill Bonner, and I have an important message. Right now, the highest levels of government are struggling against an inevitable crisis, but they're about to lose control. When this happens, it will rip our country apart in ways you never imagined, from where we shop to the family you want to protect. Look, I've made predictions like this before. A few years ago, I warned that the housing prices would collapse. Before that, I warned that .com companies would crash, and they did. Those who listened had a chance to save themselves, but this has nothing to do with the stock market. This will affect us all. I've posted a free video at disappearingdollar.com. Maybe you'll disagree with my conclusions, but first you need to watch this video and see the facts for yourself. You can watch the video for free right now by going to disappearingdollar.com. Again, that's disappearingdollar.com.
This is Dan Pilla. Do you owe the IRS money you can't pay? Are tax debts crippling you? I've defended people from the IRS for over 30 years. I've helped thousands, and I can help you too. I wrote the book on IRS settlement, and I'm telling you, there's no such thing as a hopeless case. Call 800-34-NO-TAX to finally get free of IRS debt. With the IRS's new programs, there's never been a better time to solve your problem. Call 800-34-NO-TAX. That's 800-34-NO-TAX, or my website, danpilla.com.
Keep the change. Think big. Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw radio show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to WallStreetRawRadio.com. Now, here's the elf himself, Mark Leibovit.
Welcoming back my good friend Sinclair No, KFNN 1510 Phoenix, and author of the blog EatTheBankers.com for the Saturday morning. And Sinclair, it's always a pleasure having you on the show.
Always good to talk to you, Mark.
A lot of stories as usual. The stock market took off on Friday because the jobs number came in at a point that would encourage Yellen to raise interest rates versus discouraging it. So I think I need to be looking for another job, Sinclair. The news keeps flip-flopping here. One interpretation of the news is now another, one day to the next.
I don't know too much. I mean, we've been expecting the Fed to raise rates. They've been communicating that. The basic idea was if they had a decent enough jobs number, they'd probably go ahead and would see the green light for a rate increase at the December 16th FOMC meeting. And the jobs number came in solid, 211,000 jobs last month. That was a little bit better than the 200,000 estimate. The unemployment rate stayed at 5%, didn't drop, but that was because more people were entering the labor force, and the labor force participation rate increased slightly to 62.5%. So all in all, a fairly solid jobs report. I think it probably would have taken a meteor hitting Wall Street for the Fed not to raise rates at this point. They've certainly been communicating it. Yellen went on a speaking tour Wednesday and Thursday saying she's looking forward to it. It's a sign that the economy is getting so much better. You could almost see her taking bows and the applause sign behind her going off.
Well, here we have the market now wanting to see the higher rates where before, the lower rates was encouraging the bull market. So it's interpreting the story and changing the game plan as we move forward, I guess, just following what the markets are telling us they want,
That part was a little bit unusual because normally the market looks at the jobs number and goes in the opposite direction. In other words, they want to see, on Wall Street, it's as if they almost want to see bad jobs numbers because that means more Fed accommodative policy. And of course, we know that Wall Street just loves, feeding at the trough of free money from the Fed. And we saw a reaction on the ECB cutting its deposit rate that commercial banks have to pay to store money overnight. We realize that the ECB charges banks to park money overnight. They don't pay them like we do here.
Right, negative rates.
Negative rates, yeah. Mm-hmm. And they made their rates even more negative, moving from a minus 0.2% to minus 0.3%. So the banks over there are going to have to pay even more. And the market was looking at that and saying, not enough, not enough. We want even more from the ECB, and the markets were down on Thursday, only to bounce back when the Fed looks like they're going to be tightening. What we really have going on here is this great divergence between the ECB and the Federal Reserve, between the Eurozone and the U.S. economy.
And can this really last? That's really the problem. I mean, we have a world economy or European economy that's sinking or negative, and the U.S. is the only supposedly strong economy. But can they really diverge and stay that way? That's the question. We'll find out.
It'll be interesting to see how this divergence really does play out. Normally we would think that if the Fed was going to be hiking rates a little bit, we'd see a stronger dollar. I don't know that it's going to be quite that simple, though.
Speaking of the dollar, we had a big reversal, sharp sell-off yesterday, looking negative on the charts. Looks like that 100 level in the U.S. dollar index may have been a short-term top. We'll see. It looked awfully negative technically to me, but what does that mean? You would think that the dollar would remain strong in the face of this, and we'll see if it can break back out again, but so far it's under its highs.
Yeah, this is going to be, I think, the thing to watch, and I've been talking about this for a long time. Watch the dollar and the dollar index. And, of course, the dollar got up, I think it was around a 12-year high this past week. So that'll be an interesting thing to watch, and maybe we're starting to see a little bit of a rollover in the dollar at this point. It may be too early to say that, but we certainly got a little bit of a hint, at least.
This is like the employment story and the reaction of the stock market. For the longest time, a weak dollar, much through this past decade, was good for stocks. Now a strong dollar supposedly is good for bad for stocks. I mean, it's back and forth. It's like, we know that the higher dollar hurts corporate earnings, and we saw that with the trade gap that came in, that widened unexpectedly or not so unexpectedly. Mm-hmm. So it's wild because the interpretation keeps changing. Do we need a strong dollar for a strong U.S. or not? Through most of the 2001 to 2010 period, a weak dollar was good for stocks.
Well, one thing that we have done, I went back and did a little research, and following a interest rate hike from the Federal Reserve, we go back over a couple of decades on this research. Every time the dollar index has fallen following an interest rate hike. Now, it takes some time sometimes. It doesn't happen in the immediate month or two following the rate hike. But typically over a course of about a year or so, we will see the dollar start to fall off. We're seeing the dollar that has gone through a very long bull run here. Maybe it's getting a little bit long in the tooth.
Mm-hmm. Well, we're getting a little long in the tooth in our first segment this morning, Sinclair. So if you can hang around, we'll do another segment. And I appreciate your time this morning. We're talking to Sinclair No, KFNN 1510 Phoenix, and author of EatTheBankers.com. Sinclair's going to take a little bit of a break here in the green room, so we'll catch him in a couple minutes after the break. So I appreciate Sinclair. Thank you for staying with us here. It's always so much great information to cover, and we always have so much limited time, and we have so many things to really talk about. In fact, we didn't get to the story that the Fed published their beige book this past week, and basically published 2 weeks before FOMC policy meeting, so we do have the big one coming up December 16th, where everybody's expecting that quarter point increase in rates. But there were no surprises in that beige book report. Apparently 9 of the 12 districts reported growth, and that was the same as the October report. According to the beige book, the economy seems to be growing at a moderate or modest pace, and housing markets improved at a moderate pace. And according to the beige book, labor markets are starting to show hints of tightening, but we're not quite there yet. The conditions in the manufacturing sector were mixed, and of course, as I mentioned just previously with Sinclair, the strong dollar hurts some of those areas, as many of our big companies, the Dow 30 companies, are in the Dow Industrial. So be real interesting December 16th. I guess the obvious is going to happen. They're going to raise rates, but who knows what the effect is. Stay tuned, and we'll catch Sinclair on after the next break.
WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
Sciatica, lower back pain, hip pain, poor posture. If you suffer from any of these problems, get ready to relax. Introducing an amazing product that's been in the market for over 25 years, the Sacro Wedgie. It was invented by a football coach using a common-sense osteopath technique. He created this device to help his athletes by isolating and supporting the sacrum, which is the keystone of our anatomy. This wedge-shaped bone is in the center of our hips, where a lot of pain starts. Simply relax 20 minutes daily on the amazingly simple Sacro Wedgie and let gravity do the work, helping muscles rebalance and start releasing nerves. Sit in the Sacro Wedgie at the computer or while traveling to help correct posture to finally help relieve those stubborn aches and pains for only $33.95. It's made in the USA, so click the family-owned website at sacrowedgie.com, spelled SACROWEDGY.com, or call 1-800-737-9295. That's 1-800-737-9295. Relax your back pain away with the Sacro Wedgie.
My dad was 59 when he collapsed from a heart attack late last year. Just this past August was when we spread his ashes on the St. Croix River. I loved my dad, but boy was he stubborn. He hadn't been to the doctor in over 25 years. His excuse? He simply couldn't afford it. He wasn't a rich man by any means. At less than $107 per month, LibertyOnCall.org would have been the perfect alternative for my father. Don't wait. Go to LibertyOnCall.org right now, for not just your sake, but for the sake of your loved ones. Again, that's LibertyOnCall.org.
Attention, all men. Are you urinating more frequently? Do you wake up to urinate? Are you having a slower, weaker stream? Don't ignore the warning signs of your aging prostate. Get your free bottle of Super Beta Prostate. Super Beta Prostate is guaranteed to support a more complete emptying of your bladder, a fuller, stronger stream, and less waking at night to urinate.
Super Beta Prostate is a product that I really like. I endorse it. I use it myself. I was very pleasantly surprised that Super Beta Prostate helped me fairly quickly.
Super Beta Prostate is formulated with a natural plant enzyme called beta-cytosterol. It's so powerful, you'd have to take 100 saw palmetto pills to get the same sterols as just one Super Beta Prostate tablet. Don't ignore the warning signs of your aging prostate. Call now to get your free bottle of Super Beta Prostate. Call 1-800-853-1203. That's 1-800-853-1203. 800-853-1203.
A lot of people's lives and bodies are out of balance. AlkaVision Plasma pH drops optimize pH level and get rid of harmful waste and acid. Just a few drops in water restores vibrance and energy and gets you back in balance. Now order 2 bottles and get $10 off your order. Sign up for monthly auto shipping and save 25%. Call 800-518-7615 or visit alkavision.com. Alkalize your body. Supercharge your health at alkavision.com.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to WallStreetRawRadio.com.
Welcoming back my good friend Sinclair No for our segment 3 this Saturday morning. I'm happy Sinclair had a few extra minutes for us. Sinclair No is the market commentator, financial commentator at KFNN 1510 in Phoenix, Arizona, and he's also the author of the blog EatTheBankers.com. And we have Sinclair joining us hopefully every week, though. Sinclair, I hear you are taking a bit of a vacation.
Yeah, as we get closer to the holidays, I'll take a little time off, but we have so much to cover this week. We were talking about the jobs report and the effect that that's been having on the market, kind of an uneven effect, and you have to wonder just how strong that jobs report really is and how strong the economy and the overall recovery is at this point. I think it's kind of safe to say that the economy is growing. We're seeing that in the economic data that's coming out, but that doesn't necessarily mean that the economy is fixed.
Right. And those rates need to stay low until it's quote-unquote fixed. And then also, are the numbers we're getting, unemployment, correct, too? We've had a whole dispute for years on the way these numbers are even calculated. So a lot of things to talk about.
Yeah, and you just have to think that the economy in the Federal Reserve, part of what we're going to have to be watching now is the rate of liftoff, how fast the Fed is going to be raising rates. Is it going to be a very slow and gradual process? And what kind of reaction are we going to see? I think the prices are already baked in for the December rate hike. I don't think anybody should be surprised by anything there, and that's already priced in. But what about moving forward throughout the year? How far will the Fed go? How fast will they be raising rates? Will Wall Street throw a little tantrum along the way?
Hopefully they learned a lesson from what Alan Greenspan did, or maybe it was Bernanke during before the financial crisis, when they raised it consecutively, and that helped kill the real estate bubble. You know, there was 16 consecutive increases that occurred at that time. Refresh my memory. Was it Bernanke or Greenspan that did that?
Greenspan started it. Greenspan also, you can go back to 87 and the crash of 87 when he hiked rates, fresh on the job back then. He hiked rates. That shocked Wall Street. That was the crash of 87. You would have thought he would have learned his lesson, but apparently no. But I do think the Fed learned that lesson. I mean, this has been the most communicated rate hike that you can possibly imagine. I don't know what Yellen could have done other than carving it into, the marble steps of the Federal Reserve building. She's been going around saying we're looking forward to it, we're going to be doing it, and unless that meteor strikes, it's a done deal.
Well, speaking of done deals, we had some news on Friday with OPEC, and they set their record output ceiling at 31.5 million barrels a day, and the crude oil market didn't like that at all and sold off. So we still have a weak crude oil market here, even though it's holding its lows. Got down, I think, to about 39.60. The recent lows was about 37 a barrel. We still have a problem with the crude oil market and its impact on the oil industry.
Yeah, I thought it was interesting. They set the ceiling at 31.5 million barrels. The previous target was 30 million. Of course, they've been pumping somewhere around 31.4 million barrels or so, maybe even a little bit more than that if you take a look at Indonesia. So they've been cheating on their own production targets for quite some time, and that's always seems to be the case with OPEC. They fudge quite a bit there. The revised output numbers are just bringing the targets in line with reality or a little bit closer. We also got word that Iran, it looks to be on path to start bringing more oil online. And I say that because Iran's been putting oil into the global market anyway. They just have had a hard time collecting money for it and probably haven't put out as much as they want to. But that's coming online, I believe, in January, if I'm remembering correctly. That's cleared for that. There's going to be a lot of oil out there for quite some time to come. And we broke, I think, a very critical level here at the $40 a barrel mark. I don't see that this turns around quickly, maybe a year from now, but I think we're looking at least the first half of 2016 more low oil prices, and it could go quite a bit below 40 even.
Speaking of Iran, apparently Obama is going to be lifting the sanctions on Iran as early as January, I read, too.
Yeah, that's the plan. That frees up about $100 billion in oil funds that have been held in various places outside of Iran. They're going to get a big boost of money right there. There was some concerns whether they were living up to the requirements of the atomic regulatory authorities, and they say for now they are, even though they were holding back several years ago on what they were really doing. That will continue to be a difficult area. And, of course, Russia has been accusing Turkey of buying oil from ISIS. That's been a long-going past month or two since the Russian warplane was shot down. There have been all these accusations flying about Turkey and a collaboration to buy oil from ISIS. you got to think somebody's buying that oil from ISIS. I don't know who, but somebody.
Well, maybe we're going to figure that out next week, Sinclair, because we just ran out of time. Sinclair No, editor, publisher of EatTheBankers.com. And
someday we'll have to do a marathon and just go for a few hours.
Okay, let's do that too, Sinclair. And thank you again for being with us. Just want to remind everyone, go to EatTheBankers.com to read more of Sinclair's great commentary regarding the markets. And we'll be back with Sinclair hopefully next week. Thank you. Yeah, thank you, Sinclair, for staying with us for a second segment this morning. And we do have next segment coming up. And in that segment, I guess I'm going to go over some of the active stocks and an e-signal example, which I promised you at the top of the first segment this morning. We'll talk about how I use the volume reversal and how you might want to consider signing up at e-signal and using the tool that I use virtually minute to minute, monitoring the market to see where volume patterns are going. And we'll try to do that as well and cover other news stories at that time. But it's been a big news week, and the big news I thought this week was the European action by a part of Mario Draghi, where he didn't get as aggressive as he should be. But the main issue there is negative rates in Europe, which I keep harping on. But, it could happen here. And I think that's one of the reasons why the bond market actually did okay this past week, even though the rates are supposedly going up, or the short rates are going up on the part of the Fed. Disbelief that perhaps what's happening on the economic front, on the interest rate front, will really solve the problem. And with all the problems across Europe, can that really spill over here into the U.S., even though we seem to be the so-called bastion of strength at the moment? Stay tuned. We'll be back with you for the final segment. Thank you for tuning in.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Introducing the all-new eSignal, home of successful traders across the globe. eSignal is packed with new features, including proprietary studies, free education, new content, and usability enhancements. The eSignal 12 series has a revolutionary new look and feel that allows users to quickly access free education and live events, superior customer support, and enhanced functionality. eSignal's Enhanced Market Screener Plus allows you to create custom scans in simple English by combining both technical and fundamental criteria across more than 25 global markets. Sharing with your friends has never been easier. eSignal users can now share with their Facebook, StockTwits, and Twitter friends their trading ideas and charts. And remember, trading education is at the heart of everything we do. eSignal offers in-depth free trading education by industry experts. Test drive eSignal risk-free for 30 days. Sign up at eSignal.com for a personalized demonstration. eSignal, home of the successful trader.
You're fired. According to the Small Business Administration, 75% of small businesses plan to eliminate jobs or reduce workers' hours to part-time. You're fired. According to Gallup, the unemployment rate recently jumped to nearly 9%, and the underemployment rate hit a staggering 17.9%. You're fired. 1 out of 3 young adults and 1 out of 2 recent college graduates are underemployed. Hello, I'm Keith Abel, a pharmacist and a home business entrepreneur. In 2011, I became one of those statistics myself. Instead of looking for another job in corporate America, I joined Dr. Joel Wallach, the Dead Doctors Don't Lie guy. We're creating steady incomes for ourselves and would like to show you how to do the same. If you want to supplement your current income, replace your income, so you don't have to become one of the statistics, then give me a call toll-free at 866-257-3105, 866-257-3105. You're fired. Don't wait till you hear those words. Start creating an extra income today. 866-257-3105.
By now you know that wireless technology like cell phones do in fact pose dangers to the health and privacy of everyone. Blockit Pocket's wide range of products are unmatched in providing the protection you deserve. No scare tactics, just common sense. BlockitPocket.com offers quality American-made options to alleviate and eliminate these invisible dangers. Learn more at BlockitPocket.com or call 888-315-9618. BlockitPocket.com, enhancing health and privacy.
Do you owe $10,000 or more to the IRS?
Then get on board with the Tax Admiral and let us steer your way to financial freedom.
The IRS is the largest collection agency in the world. They can freeze your bank accounts, seize your car, home, will garnish your paychecks and benefits.
Don't pick on the IRS alone. I can fight for you using industry secrets that can help stop the IRS. I'll cut your penalties, slash your interest, and reduce your overall tax bill. Sometimes I can even get it zeroed out completely.
We're an A-rated company with over 30 years experience helping people clean up their mess with the IRS. And we have a 95% customer satisfaction rating.
If you owe $10,000 or more to the IRS, are facing an audit, a lien, or levy, then call me right away.
Call 800-287-7180. Again, that's 800-287-7180. 800-287-7180. 800-287-7180.
Paid non-attorney spokesperson Adam Pulaski of the Pulaski Law Firm with principal office in Houston, Texas is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states. Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back to Wall Street Raw. I'm your host, Mark Leibovit, and thank you for joining us on this Saturday morning, December 5th. We're going to go over a few items here. First, I didn't mention in the top segment, if you need to reach me, my email address is mark.vrtrader@gmail.com. That's mark.vrtrader@gmail. If you have any specific questions, we currently don't take calls on the show, and we may change that down the road. But if you do need to reach me, that's one way you could direct questions to us. Also, wanted to remind you, you might have probably heard just a spot for Dr. Wallach here in the break, but we do have a link, WallStreetRawHealth.com. That's WallStreetRawHealth.com. I mentioned that earlier, where you could avail yourself of the products that I use, and been very supportive of that. I've been into organic food since my mentor, who got me started in the stock market in the 1970s, took me into a health food store and had encouraged me to drink a glass of carrot juice, and that got me started into natural foods and organics. But then I learned, when I heard the Dead Doctors Don't Lie tape back in the mid-90s, there's a missing piece there, and that's the nutrition that you don't get in your food. So very important, and Dr. Wallach's products at WallStreetRawHealth.com does offer you that opportunity. So I would encourage you to check in. As you know, the market has pretty much rallied for a week since the August lows. The question is, why? Are we climbing a wall of worry? Does the future really look that great? Is the nation growing like a weed? Are jobs paying more than they did in the 1980s? Well, no, folks. I think the market is melting up for two simple reasons. One is, quote-unquote, they want it up. We have central planners want it up as an illusion of strength. We have the plunge protection team, the exchange stabilization fund. The White House wants it up. Wall Street wants it up. They want to keep interest rates low, even though they may get a quarter-point hike. Historically, that's nothing compared to where interest rates have been in previous decades. There's also a lust for performance. Funds know that the fourth quarter is usually the best quarter of the year, so they're hoping for a push here. And I guess that's a traditional Santa Claus rally. So we had a big explosion up here, and the question is whether we're going to actually see new highs in all the indexes. We still have a few weeks here to the end of the year, so I suppose that still could happen. I've been concerned about divergences. I talk about this in my newsletter in the previous shows, where you don't see the Dow Transports participating, the Russell 2000, which is 2,000 stocks not participating, and there's been a lot of disasters, including the biotechs and others along the way. There are a few stocks that are doing well, and they are holding up the indexes. To hold up the Dow is only 30 stocks, so there could be an illusion there on a certain level. So, we're traders, but I guess, you want to go with the flow. The powers that be want the market up, and that's probably going to be the case with a political year next year, with an election coming up and so forth. So despite the big sell-offs, barring an outlier event like we saw in San Bernardino the last couple days, and the Paris attacks, or there could be outlier events that could really shake the markets, and I'm fearful that there could be a lot more than that. And if it becomes as significant as ISIS is threatening, then it could really change the game plan here. So we'll have to stay on top of that one. That's something you just can't control or foresee unless ISIS is out there manipulating the stock market. So we'll have to just deal with that. Meanwhile, I want to go over eSignal with you briefly here. They are a sponsor of the show, but it's also something important to me since we do use it. eSignal.com/radio is a place to go for more information. What I do is I have a technical indicator called a volume reversal, VR. We've used it for 35 years. I created it when I was a floor trader back on the Chicago Board Options Exchange. It basically measures more buyers than sellers. So if you have a rally day on increasing volume, that's a positive. You have a reaction day on increasing volume, that's a negative, and of course there's some subtleties. You got to look at it on the screen, but it usually forewarns on a short-term basis, and sometimes even on the weekly charts, near-term basis, of problems ahead. I had mentioned previously that Nike, for example, had a negative VR 2 days before it sold off sharply. There was a negative VR November 30th, a negative volume reversal, and then 4 days later there's a big sell-off in the stock, down about 5-10 points because of some negative news that came in, but we saw the volume come in. But prior to that, there was positive volume in early to mid-November saying that it was going to go higher, and indeed it did after that positive volume came in. So you had 3-4 days of nice action to the upside, 3-4 days of nice action to the downside, and that was all just pretty much a result of just following the volume patterns going into these stocks. Disney was an example where there was some negative news, as you know, here this past week, but we had the negative signals as early as November 24th, indicating that selling might come into the stock, or somebody knew something was coming, and sure enough, the stock sold off after that negative volume reversal. So I'm looking at my eSignal chart here, and I've got my little negative VR on the screen right above the bar pattern, and the same thing on the positive for Nike, and it's very straightforward stuff. Obviously, nothing is 100%. It is a technical tool, and I tie it in with a little common sense and looking at a couple other basic indicators, but it's something that you really need to look at if you're in the markets. Even if you're a long-term investor, having this in front of you, you put up a weekly or monthly chart and see where the volume patterns are going. Basically, I have the view you just can't believe the news. The big financial outlets report stories, but many times you see the volume coming in well before the stories, and it gives you a sense of direction. On Friday, in fact, we generated a positive VR in Apple. As a result, I would expect to see Apple more or less trade higher here because of that positive arm coming in. I'm not recommending the stock. This is just a report of what my technical signal is saying, but it is something that did flash on the volume charts. So you got to watch that. Speaking of action this past week, we have the active stocks, which I like to go over here with you briefly, the big ones that moved this past week were the big point movers. Berkshire Hathaway came in at the top of the list this past week. I only gained 2,800 points. Of course, it's a $204,000 stock. This is the Class A, Berkshire Class A. That's BRK.A. Credit acceptance, that's CACC, that was a gain of 35 points at 236. Daily Journal, that's DJCO, that was up 24 points. NVR, that's NVR was the ticker symbol, was up 21 points. And White Mountain Insurance was up 18 points. That's WTM. Avago Technologies, its AVGO, was up 17.5. So that was the point gainers that stood out this week. On the negative side, Medigus, MEDIGUS, that's MDGS, ticker symbol, was down 35 points this past week. Amoco, that's UHAL, that's U-Haul. That's what the company does. It's U-Haul trailers. And they were down 31 points to $403 this past week. Interesting. Intercept Pharmaceuticals, which has been in the news, ICPT, was down 29.5 points to 155.24. Barclays Bank had some negative news this past week. It's RODI, and it was down 28.5 points to 56.39. Graham Holdings, that's GHC, was down 26.25 to 512. And AutoZone had a negative week, down 25 points. That's ticker symbol AZO to $760. One of the big stories this week, I thought, was the early movement in the gold market. And, you know, it's been frustrating for the gold bugs here, myself included. But, you know, we knew we were in a downtrend. We just didn't know when it was going to turn. And there have been some nice trades along the way. But it appears that we might have hit a little bit of a bottom here. We had gold rally from 1047, which was a new low that had posted on Thursday, up to 1089 on Friday. And there's been a divergence in the shares in the last few weeks, where the shares really haven't been going lower, even though gold itself was going lower, which I thought was really interesting. So meanwhile, looks like something's cooking there, and I take a close look at the gold market and the gold shares, you know, unrelated to the Fed or Europe. Maybe there's just some accumulation finally taking place here in gold. So we're watching that very, very carefully here. I wouldn't tie it to other markets, that gold has to go up or stocks have to go down. I think it's just something that you always want to pay attention to, is look at each market separately. As my old friend Bill Hart used to say on FNN, we will know in the fullness of time. We'll speak to you next week, and thanks for tuning in to Wall Street Raw.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Alpha, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to WallStreetRawRadio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to WallStreetRawRadio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
Don't complain about your cable bill going up and up and up. Do something about it. Grab a pencil and jot down this special number, 1-855-905-MY-TV. The more cable TV rates go up, the better digital satellite TV looks. Say goodbye to the cable guy and get more of your favorite channels in 100% digital quality for less money. Call 1-855-905-MY-TV. Sign up for packages starting as low as $19.99, and there's no equipment to buy. You get free HD TV upgrade, a free DVR upgrade, and free professional installation. You control what you watch when you watch it. Record your favorite shows. Pause and rewind live TV. Even skip the commercials. Watch local channels too. At just $19.99, what are you waiting for? Pull out your major credit or debit card. Call 1-855-905-MyTV. 1-855-905-MyTV. Say goodbye to the cable guy. Cut costs and get more. 1-855-905-MyTV. 1-855-905-MyTV.